Hey everyone, welcome back to my channel. I hope you're all doing well. In today's video, I'm going to do a 6-month review of my high yield strategy and how it's working in my Roth IRA account. Now, before I started this account, I was actually looking into Social Security benefits, and I remember my finance professor in college saying that Social Security was meant to be only 1/3 of what you need to survive in retirement. So I started to do more research and I found this podcast, The Compound, and there was a gentleman by the name of Ed Slott, and he talked about how the Roth IRA account was one of the best vehicles to help people save money for retirement. So I thought, okay, let me look into more of this Roth IRA account. And if you look at Fidelity's website, you can see that the average balance is about $25,000, but averages can be skewed. So I looked for some more information, and if we look at the median retirement savings by age from 35 to 44, it's about $45,000. So I thought, okay, maybe that's a goal that I can set. But when you look at other parts of Fidelity's website, you'll find this chart that gives you some recommended savings amounts per age. And if we base this off of the median salary in the States, it's about $40 to $50,000 a year. And if we do the math from age 35 to 45, it's recommended to save about $80,000 to $160,000, which is way more than the median saving. So I thought, I just got to start this Roth IRA now. But I do have a couple of challenges. And the first challenge is you need to put earned income from the US into this Roth IRA. And sometimes I just don't make US dollar. So it's hard for me to contribute every year to my Roth IRA account. Then the other part is if I do have a lot of jobs, consultation work, and I'm able to contribute to 7,000 max every year, I'm still in catch up mode. So I got to figure out how do I put more money into this account? So in today's video, I'll share a little bit about my dividend rocket strategy and then move on to talk about the portfolio performance and how these high yields are really making an impact in my portfolio. Okay, so looking at my portfolio in the early days, I had a broad market ETF, part of a three-fund portfolio, SCHB, and then I had a covered call ETF that does options on the index, S&P 500 index, and that was XDTE. And I put this into my account because I remember seeing an episode on Income Architect's YouTube channel and read some Seeking Alpha articles about how XDTE could be really powerful in a Roth IRA account or a retirement account. So I thought, okay, let me put this in here. And then I also put YMAX, which is a Yield Max products, and it's another covered call ETF. And at first glance, I thought, okay, I think this is a good setup for my Roth IRA. But as I looked at each distribution or dividend, I found that some of these distributions were just inconsistent and really hard to plan. So I did a little bit more research and I changed my portfolio and I added a leverage ETF called HOOW that does leverage on Robinhood. And I also added a covered call ETF that does options on Ethereum. So I thought, okay, maybe this will actually help improve the consistency of my portfolio and actually help it generate income. And so that's where my dividend rocket strategy is going. I try to use high yield income products to generate income. Remember, I'm not always able to contribute US earned income to my portfolio. So I got to find ways to generate income within the portfolio. And so that's the goal of this rocket strategy is to generate income to buy more shares of SCHB. So let's look at my portfolio performance. If we look at September, you can see that the lowest distribution was about 74 cents. And then at the end of September, it was about three times, which is at that time was an all time high. But on average, it's somewhere between $1 and $2. And if we look at the numbers, and this is my statement from Schwab, you can see that from the five distributions, I made a total of about $677.97, which is pretty good for just 1 month. And if we look at the ETH distributions going in reverse order this time, made about 51 cents per share at the high and then 39 cents at the low. And actually, I think 39 cents might be the median for ETH distributions. But this actually might go higher as there just seems to be a lot of momentum for Ethereum right now. And if we look at the four distributions, it comes out to about $157.58. So if we put all these together, and you might be asking, where did the 1487 come from? Well, actually, SCHB also paid me a quarterly dividend, but nothing to write home about. So I didn't put a separate part for it. But if we add all three distributions or dividends, it comes out to about $850.41, which is a lot of money. Now, I know some of you might be thinking, okay, you have high yield income, you're making a lot of money, but what about NAV decay? Well, if we look at this chart from my last statement, you can see that it's up and to the right. So there doesn't seem to be a lot of NAV decay right now. And if we look at my last statement from Schwab, you can see that the beginning value in September was about $14,000. And you can see that, again, I wasn't able to contribute any money to this IRA account because I didn't make any US dollar. But I did generate about $850 in dividends. And actually, thanks to SCHB and also HOW, there was some capital appreciation. So in total, my account reached $16,750. Now, if we look at the income summary, you can see that it is gradually going up. This month or September was kind of an abnormal month because I got five distributions and also HOW made a big run. So I don't expect this to be the norm for every month. But if we look at my portfolio performance and we start with the portfolio value, you can see that in April, the value was about $8,300. But if you look at September, it's about $16,500. So it nearly doubled in the last 6 months. So I thought to myself, wow, maybe this high yield income strategy is actually working when paired with a broad market ETF like SCHB. And you can also see that the dividends are gradually increasing from 160 to 175 to about 260, and this month again, around $840. Now, if we look at how it compares to other portfolios or other indexes, you can see that in my portfolio is blue, orange is S&P 500, and just for fun, I put the Granny Shots ETF, and that's in purple. Just because Tom Lee runs that portfolio, and I think, wow, it's done pretty well against S&P 500 this year. So if we look early on, my portfolio is keeping up with S&P 500, but Granny Shots is kicking everyone's butt. But then in the last 2 months, my portfolio starts doing pretty well, and it's actually outperforming the S&P 500. And in the last month, it really overshot, and it's doing better than even Granny Shots. So I have high hopes for this high yield dividend strategy in my Roth IRA. Is it going to stay above the S&P and Granny Shots? I don't know. September and August were kind of interesting months and not normal for traditional months. Now, if we look at the individual performance, you can see that ETH is a pretty volatile fund, but dividends are pretty good so far, about $268. I don't expect a lot of capital appreciation yet, but if Ethereum runs, maybe this might return, back to March, April highs. But I don't expect it because a lot of these covered call ETFs do have some capped upside. Now, if we look at SCHB, and some of you might be thinking, why did you have SCHB in this account? And this is the reason why. It's not there for dividends, it's there for capital appreciation, consistent capital appreciation. And if we look at the capital gains, so far it's up about 24%, right? So I think for the Roth IRA, this is a really good part, a core part of the portfolio. Now, a lot of the income has recently come from HOOW. So far, I've received about $900, and the capital gain is a whopping 35%. I'm actually thinking of maybe trimming some shares and maybe buying some shares of this new leverage ETF called WPay. So I might make a video about that in the future because looking at these gains and the history of leverage ETFs, at some point they're going to have a cooling down period, and I'm thinking, maybe I want to keep these gains and just shuffle some of it into another ETF. But that's so far the progress of these three funds. Now, looking towards the future, my portfolio goal in the next 5 to 10 years, for next year, it's to reach 30K, and in about 4 years, 2030, to reach $100,000. Now, for me, that's pretty amazing because it took me 8 to 9 years to reach 100K in my taxable account. And this was when I was able to contribute as much money as possible. With my Roth IRA, I do have some limitations. Now, just 4 years later, you'll see that the account sort of hits close to $200,000. And in 2036, which is my ultimate goal, is to reach $300,000. And some of you might be thinking, why $300,000? Well, if we do a little recap, remember, Social Security is only meant to be worth one third. And when I looked at my Social Security site, it's you can access all this information online. It's about $2,000 a month. And with my Roth IRA, if I can generate, 5 to 10% from that 300,000, that could be anywhere from $1,500 to $2,000 a month, which I think is going to be a really important part of my retirement strategy. And then in my taxable account, right now I'm generating somewhere between $3,000 to $4,000 of qualified dividend. So I think that's pretty good as a trio, as a strategy for retiring. Okay, so that's it for this video. The next video comes out on October 20th, and the title is Uptober or Downtober. We haven't really had a big reset or any market decline. I thought it was going to happen in September, but it just seemed like September was a terrific month for gains. So there might be some cooling off in October before something really hits the trigger for the Santa Claus rally, or maybe something else like these additional rate cuts might really start to push the S&P 500 to 7,000 and the market in general. So we'll see what happens by episode 8. But thank you very much for watching this video. Please like this video and subscribe to watch more free content on achieving financial freedom and living in Asia. See you in the next video. This video is for entertainment purposes only. It is not intended as financial advice. Consult with a qualified financial advisor before making any investment decisions.